is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. We're going to take a look at the dollar immediately because, as we've talked about on this show, it's one thing to say all these types of business MOs and getting new plans in place and the whole nine yards as it comes to what Trump's been saying, but there's another thing of passing legislation. So as you can see, Washington is a funny place, and the politicians have to get reelected, and they all have to be on record, and they don't want to get called out after the fact. So this is what happens in Washington, and the dollar is suffering because of this. So let's take a look at the weekly view here on the continuous contract of the dollar. And I hope all you dinners are doing good this morning. All right. So we had a close within the profile here last week, 99.63. We talked about kind of a wait and see after we met some targets at this 99.63 and seeing if we could get a weekly close inside. And that was pretty much beyond the noise level. And then starting last night, you see what's happened here. We've had a pretty good slide. This is the daily, and we've had a profile appear above price action on the daily here. So these are double negative situations. And should you sell this in the hole and just try to race it down into 97.14, 15, which is where now the ultimate targets are going to be to explore the whole fair auction on the weekly. You know, I don't know if you're going to get any retracements in this. This is pretty damning for longs on the dollar. And it just proves this is not just snap your fingers, get a couple of Republicans together, and, you know, everybody's going to pass Trump's ideas. I wish it could go a little smoother than it is right now, but, you know, some of the things that were thrown together quickly need to be well thought out, I guess, and this is what happens to the dollar. We're going to take a look at rates also, but as you can see, there's just no things to grab onto here to try to trade any bounces. So do you sell this in the hole? That's not usually a good idea. So you're probably better off at this state either waiting for a retracement back up in that weekly unfair high, which I don't know if you're going to get that kind of a pop here, 99.63, but the other side is to just kind of wait for a new daily profile to appear. I mean, this one just kind of left you hanging. But again, you know, sometimes it's better to let the market come to you in situations like this. And there's also other things to trade. So that being said, the dollar is just, again, you got 99.56, 99.63, a big, massive lid on this right now. But I don't know if we're going to get a retracement back up into that for you to short it. So you're going to have to probably wait for a new profile to appear either on the 240, which will be okay. You know, at least getting another kind of chance to gather yourself on the short side and trade the back and fills. I don't think, you know, trading this from the long side has not been the trade du jour for a while. And we've been talking about trying to lean on the short side, especially when we started getting into or breaking. This is a daily below that 180, and that was kind of cool. Yes, I forgot about. I don't know if you guys caught the thriller, the UNC game to Kentucky yesterday. I don't know how UNC won that game. They looked bad. They got a lot of breaks though. I will admit that. Let's take a look at gold. After the dollar, you know, this is having that default reaction. We talked about blocking out the short side on this thing, just like we talked about blocking out the long side on the dollar for quite a while. And crossing the border, we had kind of had a retracement Friday, getting kind of close back to, you know, the 1230. When do we reach the low there? Only 1240. So 1236 was that weekly and for high. I almost got a retracement back up into it. But again, if you miss kind of the close above the weekly profile and then coming back and retesting it almost, it's okay. You're going to have another chance to trade this. Just at least we've been advising not to short this and trade breakouts and trade supports. And just to review a little bit, we had just an incredible trigger point around 1200, bottom of the profile, and then obviously getting back above 1217 and now 1236, and looks like we're actually going to go higher to me. It's kind of weird we haven't eclipsed recent highs that happened a couple of weeks ago, but I still think we're going to go higher. I think we talked about 1300 were the targets on this a while back. All right, let's take a look at the treasuries. Not having a huge reaction here. S&P's down significantly, 20 points. What are the Dow futures down? 157. So taking a look at the treasuries here, just to kind of circle the wagons on all the usual suspects. Pretty good reaction on the upside, but not a big reaction. I think there's probably going to be a disconnect in what's going on with the treasuries and what's going on with the dollar and what's going on with the markets in general. I mean, all we are is just kind of back in the fair auction. There's no edge here. We've talked about staying away from this trade right now. So that's the deal there. The 30-year obviously is going to have a little bit more of a higher beta overreaction. Let's hit that really quick. Then the 10-year. So again, kind of shorts are off once we cross the border on the 148.29. Just sitting right in the middle of a long-term fair auction there. I don't see a lot of edge in that trade. Silver, been kind of staying away from this trade. Thought gold was a little bit better situation. Silver has kind of launched recently. Upside targets, you got massive mega resistance at 1815, 1814 on silver. Copper, man, this really has not done what I thought it was going to do, especially today. There's insane support on the daily and the weekly at around 257, 258. But I really don't like this action right now. This is kind of awful. And we got a really good bounce off of it twice, really good bounce once, but next bounce was not that good. Now we're just kind of crowding it. If you're long copper, I would consider, especially, the dollar's probably going to head south more, but I think, copper's kind of showing itself. It's not your on-sale metal commodity to buy right now, I'll be honest with you. I think that trade's kind of over. It's a decent little pop, but didn't have a lot of follow-through there. All right, let's see what's going on here. Okay, so let's hit a couple other things we usually look at. I'm going to hit the Nikkei really quick. The yen is, and we're going to cover some currencies after the break, but we're going to look at this yen-Nikkei relationship in just a few minutes, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Let me get my currency thing up here. Hate it when that happens. Here we go. We were trying to look at the Nikkei and the yen here. So here's I'm sorry, that's the euro. There we go. Here's the yen. So we had kind of talked about this one last week, showing a little bit, less, a relative weakness relative to the dollar and all its all the hair on the dollar. So breaking and having a weekly close below 111.67.68, that just not good. Just like the dollar, it kind of caved in below its weekly threshold. So, what do you do at the end now? I mean, this is the daily, kind of can't sell it in the whole situation here, but here's the 240s. It's kind of a very similar looking chart to the dollar index, but you really want to wait even on a 240 to see if you can get some new profiles setting up. I don't know if the yen is going to continue to sail south as much as the dollar will, but we really want to wait until we have some new inflection points to play defense against on that one. But again, I don't think you can start going long the yen. I mean, I think you still got to be selling resistance for a little while longer. So let's take a look at the Nikkei. Yeah, somebody was saying this. I'm blown away by South Carolina. Yeah, they play as a team. It's really nice to see that these days. I was watching Kentucky. Man, I mean, freshmen and sophomores just hired guns, and they won't be around. And South Carolina, it's nice to see that. Anyway, here's a weekly on the Nikkei. So the yen coming down on the chart means there's a kind of a valuation of the yen, and the stock market obviously has got to reprice itself a little bit here. So here's the weekly starting point on the yen trade and a new profile and breaking down a really thin profile. So you've got to be willing to trade breakouts or breakdowns on thin inside boxes, so to speak. So now I think you've got a really, really clear sign here. You can play defense above 19,000, and you could be in for a good ride here. So that good ride I'm not hope I don't get everybody's hopes up. It could be 1,000 points. I said it. So a really good risk reward on that particular instrument, in my opinion. All right, so a couple other currencies. Let's just cover the landscape here. Aussie dollar, man, got to get bounced a couple of weeks ago, but really had been talking about. Let me get the right chart up here. Let me make sure I got the right chart. Okay. What is going on with my e-signal charts? Okay, here we go. So we talked about 76, 24, 25 kind of being the next back the truck up moment for the Aussie. I think we're there. We've had a little noise here. Nothing that you could really quantify as closing within the box there on the daily. So I think you've got a great trade on your hands here. I think you've got a great risk reward. I think you've got a really good chance to play defense. Relatively tight now. I think we've had a nice reversal action. I think the dollar's going to sink more. I know that doesn't mean a lot to the Aussie dollar, but I think you've got a good chance to at least revisit highs again, 77.50, and more importantly, the risk reward is really high on this particular trade. All right, we don't look at this much, but let's again. Currencies are probably going to be in play for a little while here. The uncertainty. All right, so the Canadian dollar, told you I haven't been really super excited about trading this from the long side or the short side. I think you've got better things to look at, but again, that's the view on the Canadian dollar. Big support 132.39 and big resistance at 135.88. Now we can get into the euro. All right, so I mean, no mystery there. Euro powering up. We talked about the dollar coming in. It was nice how this thing staged up here a little bit and then launched off 107.82. So what do you do with it now? That's the big question. I'm telling you things that have happened in the past again. I'm sorry about that. Here we go. So, oh man, why does that do that? And I don't know how to get that off. We'll try to get rid of that on the break. Oh, there you go. Yeah. Okay. Wow. I figured something out. So I think we've got a lot higher to climb here on the euro, believe it or not. I know we've had a big move today, but 111.41 kind of coincides with the bottom of the profile in the dollar, which is around that 97.15 area. It's not going to be a straight line. So, again, what do you do with it now? I think you just got to, if you weren't in this thing earlier and were selling the dollar or whatever you were doing, I think this is the 240s. I just showed the dailies. You've got to have some new things to play defense on because, again, you're kind of throwing darts up here, and it's definitely a momentum trade if you get into it now that you just kind of are at the mercy of the market floating around, in my opinion. So the smart trade probably would be to wait for new daily information or new 240 information, hope for a retracement, and then a lot of people who are short this, there's two things going on. A lot of people that might be short the euro right now, anytime this thing pulls back, even if it's way higher than where they thought about covering their shorts earlier, they're going to be looking at trying to take some out on support. They don't know where support is. They're flying blind, but you do. Wait for the inflection points to come out and take advantage of the frenzy. British pound. All right, so there's that buy point that John from Philadelphia talked about, and again over there. So we kind of hit our targets here. If you were getting long on these bounce points, I wasn't trading this, but if you look at it, this is pretty serious. And with the situation that the dollar may continue to head south, any types of retracements into 125.39, you gotta buy them. You gotta buy them. Let me check the DIN really quick. Let's see. No questions. All right. Let's go back to our other server and let's start looking at some stocks here. See if we got any of these things printing this morning. Oh, and we got to look at the S&Ps. Ooh. All right, so looks like we're printing about 139.63 on Apple. Nothing major. This is still not the stock to short. I mean, this thing does not have to come back. And to be honest with you, right now, just kind of sloughing off about 75 cents is probably pretty scary for shorts. Here's the S&Ps, and we're going to hit this and talk about some breadth changes in our scanner and a whole bunch of other things when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So we're going to talk about the S&Ps a little bit here, and we had talked last week, kind of a mixed bag hanging around this 2341 area. And if you look at the 60-minute, oh wow, and I get to go down to Florida this week and hang out with Tom and Tommy, sleep on their couch. Looking forward to it, guys. Actually, I am going down there. Looking forward to it, man. I love to go to Clearwater, see those guys. Okay, so the 60-minute, we're going to avoid that for a second. The daily, again, breadth crossed over, kind of started rolling over a little early on, let's see, 20th and the 21st. And we had talked about a lot of new profiles trying to appear up top here. Kind of ended the week with 49 still left, attempting to cross over. So let's see. You're probably going to have negative weekly breadth now. But just having that overhanging mess and the daily turning over, the internals kind of rolling over initially. I mean, I was, talking to you guys about, trading the breakdown to that 23.41, not buying the bounce. And, who knows what's going to happen over the weekend. But right now, we are clean and clear of that 23.41.30. So we kind of opened up last night and really hadn't looked back. So what do you do with this now? Here's the 240s. I'm just going to give you some short-term views here. I actually can show you this in the scanner here. Let me build the futures section. Go down to the S&Ps. So this is the level of the market right now. This yellow line, here's the profiles on all the time frames. And I promise you we're going to release this. There's the 60s, there's the 240s. So let's just go into the E-signal charts for a second. There's the dailies, of course, up top. This is the daily. Nothing to hang on to there. The 240s. This is where we started out last night. And now here's the 60-minute. Don't talk a lot about the 60-minute, but I think it's kind of appropriate right now because we've got some volatility in the air, and we're going to look at the VIX too. But the 60-minute, you got a nice little retracement back up into 27.50. You got a lot of volatility, and we kind of sometimes have to migrate down time frames. I don't know why that says D up there. Hold on. Okay. And look at inflection points to kind of be aware of here. So I think we've rallied. We rallied 10 points up there to hit that. So this is a good example of kind of letting the market come to you. But what do you do with it now? Guys who are trying to trade reversals, I think you'd probably be better off just kind of waiting for some new 60-minute profiles to appear. If you've got the scanner, you'll see that happening in real time. So if you kind of look at this, you'll start seeing some hints of it. You got red across the board right now. I mean, so that means, and again, these profiles don't necessarily pick bottoms and tops. They just kind of give you an idea when things are changing relative to balanced areas, fair auctions, what have you. So right now, the red shoots are in place, man, and there's just no edge. I mean, you are here. So if you want to see a real change in tone to try to trade this from alongside, you'd at least start having to migrate above 27.50 right now, and that may change. Or at least get some new things kind of put in place down below on the daily. Just get some hints of some new profiles starting to come out here. And again, we're gapping down pretty decently this morning, so it's kind of difficult to short this. That's why we're looking at 60-minute profiles to kind of keep it tight and take that volatility, take the volatility into consideration. On that note, let's take a look at the VIX. Talked about trying to still, buy vol down here. Didn't know when it was going to happen. This is our weekly. Man, why is my charts doing this? Hold on. It's like misnaming everything. W is for weekly. I'm not insane. Okay. So, we've kind of come up to the top of the profile here. This is a little concerning if you're trying to trade the S&Ps from the short side right now. We've kind of gotten to some resistance on the VIX. Probably going to edge a little bit higher today regardless. But again, wait till you have some market come to you moments on the S&Ps. Crude, this is pretty daggone damning for crude right now. I'll say this. So the weekly and the daily, we had some pretty serious resistance between 48.37 and 48.76. Here's the daily. And with the dollar coming off like this, you've got like zero default reaction climbing on crude right now. So Does that give you more and more reasons to short crude? I think so. I mean, we had a pretty serious event happen, weekly close below profiles in the long-term weekly. That just hadn't happened in a long time. So you got to look at that with it is what it is. Crude can go lower. The dollar's giving you some good indications that that's a great trade. Or excuse me, not a great trade, but at least you're blocking out the long side. Let's take a look at the DEN here really quick. All right. Okay. Just wanted to catch up there, see if there's any questions. All right. So let's take a look at the scanner really quick. Again, this opportunity matrix rocks, in my opinion. I'm going to do a webinar and show you how to use this custom beta. We're coming out with one more new build before we roll this out, just to fix a couple of little rounding errors we didn't catch before. But let's take a look at breakouts, and that's on the futures. So let me get this back to our. Okay, so Friday. We didn't have too many breakouts going on, and we started seeing a lot of the composition of the S&P on the internals start to change. We talked about that a lot with our breadth statistics, and you can go in, I'll show you those again, but a couple of stocks that were just kind of quantifiably breaking out. BCR, let me put this back in here so CR Bard, let's take a look at that this morning. BCR. A stock that's completely been out of control. Not the first time it's broken out recently, and not printing this morning. Been a very big high flyer. The reason I'm bringing this up is if we do get any type of downside migration, believe it or not, you've got a chance to pick it up again at 245.18. And if you don't get any type of pullback whatsoever in the market that's gapping down 20 S&Ps, just buy it. Buy it and play defense below 249. I know that's hard to do, a stock that's in the stratosphere like that, but when you have some clarifying moments like this, what you want to do is use the scanner, find opportunities that are hanging in there on the long side, and I'll show you how to do that in just a bit.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome to the show. So, you can do quite a few custom sorts here, but a lot of times, you can come in here. I mean, it's good to do research at night with this particular product, and a lot of times I'd like to see, what's kind of just coming into Custer's last stance here that's been in somewhat of an uptrend. So this trading above in situations like this, when we have a pullback, trading above, and at the bottom of the profile, giving me a good shot here to play some defense and kind of trend up in a pullback, but not breaking the spine of the stock yet. So this is one that I like to look at in situations like this. And what'll happen is you can kind of keep this sort up. It'll dynamically populate. Amphenol's one we've been talking about, and CSX, not bad. The ICE, God, one of my most hated companies now. They took over eSignal, and they're relentless. I hate my bill. Here we go, Johnson & Johnson. All right, so this is one we've been talking about, kind of waiting patiently. So you should be familiar with this stock just based on me talking about it a lot. But Friday, good action. I would love to see this thing open like this. Let me pull it up. What am I doing here? Okay. And by the way, did you guys, they were talking about Kimco Realty on CNBC today. It's like, man, we called that early. There we go. Okay, 124.76. All right. So, so here's the drill. No new profiles in the weekly, which is great. Talked about letting the market come to you as soon as we got that takeoff indication in the scanner right there. The market has definitely come to you. It's explored the entire fair auction. We're kind of gapping a little bit lower here. Not much. We're kind of right in there. Not that bad. Again, this is the type of situations where you let it, if it can, let it migrate back up above 125.15. I would love to see the market go down while that's happening. And again, there's a lot of what-if scenarios, a lot of permutations in the tree, so to speak. But if we can get the market to come down a little bit more, let Johnson & Johnson open up and maybe cross the border up there, that's when you start pressing the gas pedal on something like that on the long side, because then you've got something that if the market does rally, it's probably going to just lift this thing up by default. We've had a nice kind of backing and filling motion here on Johnson & Johnson, so might be a decent thing to look at here. I'll tell you some chicken parts that they serve in the Philippines, Jay, on another network or time slot. It's weird stuff. really weird, wacky. All right, let's take a look at a couple of. If you guys want me to get into it, I will, but it's not for the faint of heart. All right, going back into the daily grid. Another thing I wanted to look at was just stocks that are hanging around weekly unfair highs. There's quite a few of them actually. So Coach, and what I would look at here is, again, you've got some decent IPG. This is kind of cool. I mean, these stocks, just, kind of put them in your favorites list and just kind of keep, see how they open up. I mean, the good news about this particular product is you can throw things into a favorites list and then, just kind of pull it up really quickly. Just like if I want to go to Forex, there it is. Boom. And you can kind of go back and forth to different lists really, really quick. And have multiple scanners up at the same time, actually. So I was right here. Okay. And I want to look at Coach, COH. All right. Okay, so pretty decent action on this last week. So, kind of defended that unfair high really about 38.96. Let's just call it, 39, let's just call it. So, a stock that I'm not super high on getting long. It's been kind of edging higher. Taking a look at a stock like this, kind of seeing how it's opened. This is one where it could just give it up all at once and hit 37.11, so you got to be willing to play defense here. But not a bad-looking little situation here. Kind of defended that weekly unfair high. You might want to keep your eye on this one. I hate the company, but it is what it is. A couple of the stocks on that list. Let's take a look at Kimco. That made me proud. Kimco. Yeah, so now they're saying it's not a great stock. I got to be an analyst sometimes. That must be. Can I get paid to tell people that it's not a good stock after it's come off 40, 50%? Isn't that amazing how that works? Okay, so Kimco. Still not anything that I would look at to try to buy on sale. And yes, we have come off, I guess, about 30, 40% here. On this one, I don't think you even want to play around with it until you have another weekly profile appear. I think all this is noise right now. We'll check PANW. Somebody's asked me to look at that from the den. Achimama. Wow. All right, so I think Tom was looking at this a couple of weeks ago, and we had a little bit of a bounce here, but again, no new, you have a profile appearing above price action here too in the long term. I don't think I've ever showed one of those where it just didn't hold true, that it was at least a continuation pattern in the same direction, either above or below. You also have something that's not too cool on this one at this stage, which is a daily profile appeared above price action. If you could get any bounces in a 114.89, please feel free to short this again, believe it or not. We're not printing yet, but again, if you're stuck in this, it might be good at, you also kind of didn't break through yet these weekly long-term lows here, and you almost got to figure, when they gun for those things, they want to push people out before they reverse it. So I wouldn't call that a flush yet. So keep that in mind. This is going to be something that probably is going to bring some more pain to some folks, especially with the market gapping down. And then you might have some, when you start seeing new profiles appear and ways to play defense, it might be a chance to kind of play around with this from the long side, but not right now. Coca-Cola. We're going to hit when we come back, folks. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back. We got a little bit of time left here, and we're going to look at the XLF first. We're gonna look at beans in a second. All right, so the XLF obviously kind of technically broke down here, and this morning it looks like we're printing about 23, so a little bit lower. And you know, Steve Banger and I came on, and Steve was kind of a big fan of, you know, buying the dips on this particular index, or excuse me, sector, and trying, you know, again, it's always better to try to find the internals that are, if you're trying to buy or looking at the sector as a buy, it's always increasing the odds to drill down into some of the instruments that are even more attractive, you know, longs in a sector that you might like from the long side. So again, I recommend that highly if you're looking to trade and make a living. 2411, that breakdown. So right now, you know, that was kind of the uncle point, and you know, we're heading even lower now. So that's what stops are for when we're trading something from the long side. But let's take a look at, you know, I think we looked at what was it, Morgan Stanley and a couple other ones. Yeah, Morgan, 4140. So we had a close below weekly profiles of Morgan Stanley. Let's take a look at the criminal enterprise. JP Morgan, excuse me. Weekly closes all below those ahead of time. So when you look at the long term, you look at that sea change event, you got to just back off the gas pedal on the long side when that happens. The XLF is in the same situation right now. Bank of America. A couple other requests here I'm trying to catch. Okay, so Bank of America. Now this one, we kind of talked about. This might be one that would be hanging in here. 22.75 might be a buy point for that. You can at least play defense on the long side, and we're trading about 22.43. So it might be that kind of Johnson & Johnson thing you're looking for, that just kind of sit tight. Let's see if the market can lift some of these things up, or they can lift up on their own. All right, let's take a look at, let's see. Where's it at? Where's my little buddy? November beans. So this is one, I'm going to try to get to POT in just a second. This is one, don't get completely carried away with some of my comments about this possibly revisiting this 850 area. But it looks pretty technically sound at this stage. And the good news is you've broken down below profiles, recent lows. You've kind of gone back and retraced this morning already, 981.5. You've reached a high of 979.25, so gotten really close to that and backed off. So technically speaking, this is looking really, really attractive. It's kind of doing what it's supposed to. But again, put your stops in place. Beans are not the easiest thing in the world to trade, but these profiles, if you see what has happened here along the most recent history, it's a pretty big deal to get outside this pretty wide profile, and going back and retesting that neighborhood this morning and backing off, pretty good sign for shorts. So let's see, what else? POT, somebody asked me to look at that. And again, the scanner is going to give you all this information in a real concise manner. So if I go into the scanner, go into the future section, I got to talk really quick here. There's soybeans. We're doing May beans in here. Okay, so a little bit different story, but pretty much the same deal. Let's take a look at POT. There we go. Potash Corp. Depending on how this opens, it doesn't look too bad. At least a chance to play defense, and it looks like it's not open yet, but the big number there is around 17. Thanks, guys. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.